Good morning everybody. Now we have to see holding and subsidiary company. Holding company. The company buying majority or all shares of another company is called a holding company. Majority share means it is must more than 50% of the entire shares. The company which is controlled by a holding company is called a subsidiary company. In this case, X Limited hold, that means purchase 59% of equity shares of S Limited. In this case, X Limited is a holding company, S Limited is a subsidiary company. In problem, we have to prepare consolidated balance sheet. Consolidated balance sheet means combined balance sheet of X and S Limited. Holding company is also called as parent company. Capital profit. Profits existing in or earned by the subsidiary company up to the date of acquisition, that means purchase of shares by the holding company, are called as capital profit. Capital profit is from general reserve, dividend equalization reserve, contingency reserve and profit and loss account. Pre-acquisition profit, otherwise called as capital profit. Revenue profit. The profits earned by the subsidiary company after the purchase of shares by the holding company are revenue profits or post-acquisition profits. This is called revenue profit. The revenue profit, otherwise called as post-acquisition profit. The next we have to see minority interest. Some shares in the subsidiary are held by outsiders other than holding company. Their interest is known as minority interest. In this case, X Limited purchased 59% of the shares from S Limited. S Limited, that means subsidiary company, have 41% of shares. The 41% of shares called as minority interest. The 41 shareholders called as outsiders. Their interest is called as minority interest. Calculation of minority interest. Paid up value of shares held by outsiders. That means 41% of shares. Add any capital profit or revenue profit or increase value of the assets. Then any loss, then decrease the value of assets is subtract from outsiders. Then we get minority interest. Now we have to see goodwill or capital reserve. Holding company acquires the shares in the subsidiary company is known as investment or cost of shares or cost of acquisition. Okay. Then the investment is shown in the asset side of the balance sheet of holding company. The difference between actual worth and investment. Actual worth means paid up value of the subsidiary company. The difference between actual worth and investment, it is called goodwill or capital reserve. Investment is high, it is called goodwill. Actual worth is high, it is called capital reserve. Now we have to see first problem. Give a consolidated balance sheet for the following situation. H is the holding company, S is the subsidiary company. Share capital is 12,000, 5,000. Sundry liabilities and sundry asset is given. Investment 5,000 shares in S Limited. Amount is 5,000. So per value is rupee 1. The holding company purchased entire share from subsidiary company. These are the information is given in the problem. Now we have to do the solution. So in this problem, the final account format is particulars, schedule number, then amount. First, Roman letter 1 is equity and liabilities. It is a simple problem. So, holding company share capital is 12,000 and sundry liabilities, it is called other current liabilities. Add 8,000 plus 3,000. The amount is 11,000. Total is 23,000. Then asset side, tangible fixed assets, that means sundry assets. We have to add 15,000 plus 8,000. We get 23,000. In this case, no minority interest. So we can eliminate the investment. It is a simple problem. X Limited purchased 60% shares of Y Limited on 1/1/2002. When the balance on their profit and loss account rupees 1,50,000 and general reserve 1,60,000. It is as on 1/1/2002. 31/12/2002, the balance sheet of Y Limited showed profit and loss account balances of 4 lakh and general reserve balance is 3 lakh. Calculate capital profit and revenue profit. It is logically we can do it. Total profit equal to capital profit plus revenue profit. Capital profit is pre-acquisition profit. Revenue profit is post-acquisition profit. At the date of purchase 1/1/2002, it is a capital profit, and 31/12/2002 it is called revenue profit. So now first we have to see capital profit at the date of 1/1/2002. General reserve and profit and loss account 1,60,000 plus 1,50,000. So capital profit is 3,10,000. Then what is the revenue profit? Now we have to see total profit at the end of the financial year, that means 31/12/2002. General reserve and profit and loss account is 4 lakh plus 3 lakh equal to 7 lakh. So 7 lakh is the total profit. Then capital profit is 3,10,000. So now we get revenue profit is 3,90,000. Calculation of minority interest. In this problem, non-G Limited balance sheet is given. Share capital, general reserve, creditors, profit and loss account, sundry assets, plant and machinery, other assets. Per value share is rupees 10 and number of shares is 10,000. Nellai Limited acquired 75% of shares at rupees 1,05,000. So in this problem, Non-Gil is a subsidiary company, Nellai is a holding company. We have to find out the ratio of shares, holding and subsidiary company. So Nellai is to Non-Gil, that means holding company has 75%, subsidiary has 25%. The ratio is 3:1. That means Non-Gil company has only 2,500 shares and Nellai company has 7,500 shares. Now we have to calculate minority interest. The face value of shares is rupees 10 into 2,500. So 25,000. General reserve. General reserve is 45,000. We have to see minority interest for subsidiary company. The ratio is 1/4. So 11,250. Profit and loss account is 30,000. So this is also we have to find out 3:1 ratio, so that we get 7,500. Total value is 18,750. It is a profit, so we have to add it. So now we get minority interest. The minority interest amount is 43,750. The next problem, it is an important problem. It is asked in 8-mark question. Prepare a consolidated balance sheet of A Limited and its subsidiary B Limited as on 31st-12-2000. A is a holding company, B is a subsidiary company. Share capital 5 lakh, 2 lakh. Per share value is given. Per share value is rupees 100. Reserve fund, profit and loss account, debentures, creditors. Fixed assets, investments. Investment is 1500 shares in B Limited. Amount is 1,50,000. On the date of acquisition of the shares by A Limited on 1/1/2000, there were no profits or reserve in B Limited. So this is given in the problem. Solution. First step, we have to find ratio of holding and subsidiary company in the share. So holding company take 1500 shares from B Limited. Total share is 2000. So ratio is 3:1. Below the balance sheet is given, there were no profits or reserves in B Limited. So we don't find out capital profit in this problem. It is continuation of the fourth problem. Next we have to find out revenue profit. Reserve fund and profit and loss account is given in the balance sheet. The amount is 1 lakh total amount. That means it is a revenue profit. The revenue profit is distributed into holding and subsidiary company. Their ratio is 3:1. So holding company has 75,000 of the revenue profit and subsidiary company has 25,000 of the revenue profit. Okay. Next we have to see goodwill or capital reserve. So total investment is in the problem is in the balance sheet is 1,50,000. Face value of shares is also 1,50,000. That means holding company take 1500 shares from subsidiary company. Per share value is 100. It is the face value of the share and the investment value. In this problem, we don't find out goodwill or capital reserve because it is nil value. Both are equal. Then minority interest. In this problem, there is no capital profit and goodwill also. Minority interest. Face value of shares in the subsidiary company. Subsidiary company has only 500 shares. Per share value is 100. So that amount is 50,000. Add revenue profit. Revenue profit is 25,000. So minority interest is 75,000. This is also continuation of the fourth problem. The last two slides we have to see the working. It is the final problem. The first Roman letter one is equity and liabilities and second one is assets. First we have to write share capital. Holding company share value is 5 lakh. Then reserve and surplus. So reserve fund is 1 lakh. Profit and loss account is also 1 lakh. It is given in the problem. And we have to add revenue profit is 75,000. So total is 2,75,000. Minority interest we have to calculate it. The amount is 75,000. Long term borrowings, that means debenture amount. This is 1 lakh. Trade payables for holding and subsidiary company. This is 3 lakh. So total amount is 12,50,000. Assets. Tangible fixed assets 8,50,000 and 4 lakh. The total is 12,50,000. So we have consolidated the balance sheet of holding and subsidiary company. In subsidiary company, reserve and profit and loss account we have to taken for the calculation of revenue profit. So we have to ignore it. Students, I think you have the little knowledge about holding company. Next problem, it is also important problem. The balance sheet of A and B Limited as on 31st-3-2007 was as follows. Liabilities, equity shares, per value share is rupee 1, 12,000, 5,000. Reserve, profit and loss account, sundry liabilities is given in the liability side. Then asset side, sundry assets and investment, 5,000 shares of B Limited. Amount is 6,500. Shares were acquired by A Limited on 30th-9-2006. B Limited transferred rupees 500 from profit to reserve on 31st-3-2007. Prepare consolidated balance sheet. These are the information is given in the problem. So, face value of shares is 5,000. That means share capital is 5,000, but investment amount is 6,500. So 1,500 is a increased value. Then the date of 30th-9-2006, it is the purchase date. So 30th-9-2006 up to profit is capital profit. 31st-3-2007 up to profit is revenue profit. Now we have to see the solution. B Limited number of shares is 5,000. A Limited investment also 5,000. So no minority interest. Now we have to see capital profit reserve. As per balance sheet of subsidiary company is 1,000. Transferred to profit and loss account. So reserve amount is 500. Okay. Continuation of the fifth problem. That means continuation of a capital profit. Profit as per balance sheet. This balance also 1,000, but transfer from reserve is 500. So we have to add it. Total profit is 1,500. Pre-acquisition period and post-acquisition period. That means 30th-9-2006, the company acquired the shares from subsidiary company. So pre-acquisition period is 6 months and post-acquisition period is 6 months. Total profit is 1,500. So it is divided into 2 because pre-acquisition and post-acquisition. Now capital profit. Reserve value is 500. Then profit is 715. Total capital profit is 1,250. Okay. Post acquisition profit is otherwise called as a revenue profit. So revenue profit is 750. In this problem, we have to find out calculation of goodwill or reserve. So total investment is 6,500. Actual worth is 5,000. So capital profit 1,250. So amount total is 6,250. The difference between the 6,500 and 6,250, the amount is 250. It is called as goodwill. Now we have to calculate capital profit, revenue profit and goodwill. Now we have to see consolidated balance sheet. Roman letter 1 is equity and liabilities. Roman letter 2 is assets. First one is share capital. The holding company share capital is 12,000. Reserve and surplus. Under the heading, we have reserve and profit and loss account 5,000 plus 2,000. Add revenue profit. So total is 7,750. Current liabilities, that means sundry liabilities 7,500 plus 1,000. Total is 8,500. The grand total of Equity and liabilities is 28,250. Then assets. The fixed assets is holding and subsidiary company 20,000 plus 8,000, 28,000. Then we have to find the goodwill. The goodwill is a asset. So we put in the asset side. Goodwill is a schedule under 5. Amount is 250. So total is 28,250. Okay. Next problem is A Limited acquired 8,000 equity shares of C and Company Limited on 1/1/2002. The following are the balance sheet of two companies as on 31st/12/2002. A Limited, C Limited. Equity shares, general reserve, land and building, plant and machinery is given in the problem. Sundry creditors, profit for the year 2002, bills payable, profit and loss account as on 1/1/2002. These are the liability side. Stock, debtors, investment, bills receivable, cash and bank balance is in the asset side. So investment is 8,000 shares at rupees 10 lakh. Then we have to see adjustment. Bills receivable of A and Company Limited include rupees 10,000 accepted by C and Company Limited. Sundry debtors of A and Company Limited include 50,000 due from C and Company Limited. Stock of C and Company Limited includes goods purchased from A and Company for rupees 60,000 which were invoiced by A and Company at a profit of 25% on cost. Solution. Subsidiary company has 10,000 shares. Holding company only take 8,000 shares. The ratio is 4:1. Now we have to find out capital profit. General reserve and profit and loss account as on 1/1/2002. The capital profit is 2,60,000. 2,60,000. It is divided in the ratio of 4:1. So capital profit of A, that means holding company get 2,08,000 and subsidiary company get 52,000. Now we have to see revenue profit. Profit for the year 2002, 80,000. So 80,000 it is split in the holding and subsidiary company according the year ratio 4:1, 64,000 and 16,000. Then find out goodwill or capital reserve. Investment. Investment is 10 lakh. Actual value of share is 8 lakh. And holding company takes some profit from subsidiary company, that is capital profit. It is called 2,08,000. Total is 10,08,000. So it is a capital reserve. Calculation of minority interest. Subsidiary company share value is 2 lakh. We have to add capital profit and revenue profit. We get minority interest is 2,60,000. Okay. Unrealized profit on unsold stock. That means 25% on cost. Stock value is 60,000. 60,000 into 1/5 equal to 12,000. That means 1/4 on cost is equal to 1/5 on sales. Then we have to go for the consolidated balance sheet. First one is equities and liabilities. Share capital, holding company share capital is 20 lakh. Reserve and surplus, general reserve, capital reserve, profit and loss account and revenue profit. The total is 7,72,000. Then we have to subtract unrealized profit 12,000. Now we get 7,60,000. Then minority interest as per calculation 2,68,000. Trade payables, creditors, total is 2 lakh. Then intercompany adjustment 50,000. we have to subtract it. We get 1,50,000 and bills payable. So this is also 30,000 plus 10,000 minus 10,000. It is a intercompany adjustment. So total is 1,80,000 in the asset side. Tangible fixed asset, land and building, plant and machinery, 1,90,000. Inventories, 1,50,000 and 1 lakh. It is a holding company stock and subsidiary company stock. Then we have to subtract stock reserve, that means 25% on cost. The value is 2,38,000. Trade payables, debtors, 1,02,20,000. Then intercompany adjustment, 50,000 we have to subtract it. Then bills receivable, 80,000 plus 10,000 minus 10,000 is a intercompany adjustment. So total is 2,50,000. Cash and its equivalents, 8,20,000. So we have consolidated the balance sheet.